Good morning, everyone. It is Thursday, April 21st. It's 9:23 a.m. Eastern Time. The stock index futures have a bullish tenor from Globex. There are still levels that need to be exceeded by all four before you can get overly excited. In particular, I'm watching the NASDAQ because it's been really, really weak. Now, the Dow is leading the charge higher. It is already taking out its March high, which is a significant level. The Russell is acting well off of this low, but it's lagging also. It's a long way from its March high. And you can see the ES here. This is the March high in the ES right here. So, you know, we're sort of in the middle of nowhere still, but there's a bullish tenor. Let's talk about breadth a minute. Let me pull this over. We've had two consecutive days of up breadth, neither of which have been particularly not much momentum. That's what I'm trying to say. What you're looking for here, or what I'm looking for here, I'm looking for that breadth thrust. I'm looking for something like plus, 17, 18, 1900 that shows some internal momentum. This is still very tepid breadth. Now, I mentioned the other day, it's not unusual for the market right off of an important low to take a day or two to generate the momentum, and then you get that breadth thrust that characterizes all strong trends, and then the market will grind higher from that point to one degree or another on diverging breadth for days, and in some cases weeks, frankly. But if we're going to reach this level up here, we've got to see an expansion in breadth. We're not going to trade from here to here on breadth that never exceeds plus 1300 on a closing basis. It's just, I just don't think that's going to happen. So we're looking for that expansion in breadth. Now, this is going to be a gap up. So in the cash market. So today's a candidate for that wide range day that's accompanied by the expansion in breadth. We'll see what happens. You have to favor longs. You have to favor longs against this low. If today is going to be a wide range day at this point, and we're going to have the big expansion in breadth, what is this? Yeah, this low should not come out. Actually, the cash session low here should not come out. So you're either long or favoring longs. You don't sell spikes like this. NQ is approaching a really, really, really important key reference area that includes yesterday's high and then highs from 3 days in this two-sided balance area that's been trading. So we could get a little pushback in here in the NQ. Now the ES is coming in pretty hard here. I really ideally don't want to see this low come out. Now the cash low from last night, from yesterday, is way down here at about 44.64 right here. So if this comes out, it opens up lots of possibilities. I'm still biased alongside this, would still be biased alongside the market. This is, as you all know, the noisy part of the day. I'm looking for that wide range day that's accompanied by a rather significant expansion in breadth to confirm that the present rally is indeed going to carry the indices that are not above their key reference areas above their key reference areas, and then have legs for more than a day or two. Okay, it's 9:52 a.m. Eastern time. In the webinar last night, I talked about the importance to me and hopefully to you guys, the benefit of watching daily charts of all four of the indices. And it can be extremely helpful at times. We're at a major inflection point now in the NQ. And because we're at a major inflection point at the NQ, what you're looking for now, here, I'll just pull this over. What you're looking for you can see we're in a balance area on a 3-minute chart. And the importance of this balance area can only be understood if you're looking at a daily chart. So yeah, okay, you're a day trader. Well, that doesn't mean you stick your head in the sand and you're unaware of what's going on in different time frames. As a matter of fact, if you do that, you're not going to do very well. So here we are, right here in the NQ. Now, what should happen? Under a bullish scenario, I can tell you what should not happen. We should not retrace more, and I'm being very generous with allowing even a 50% retracement back into today's range in the NQ. So what you're looking for here, what you're expecting to happen under a bullish scenario is you're expecting this market to trade strongly above this level, above today's high, and then take out these other. There's a high from yesterday. This is from the 14th. This is from the 13th. This is from the 12th. So if we get above this level, this has been a really, really, really sticky level. The NQ has not been able to, it's been stepped on every single time it gets up here. So maybe it gets stepped on again. I don't know, but we are at an inflection point. And under a bullish scenario, you want to see the NQ close above this level and actually continue higher. A retracement below the 50% retracement of today's session range, that session range implies Globex included, brings a lot of if and or buts into play. Doesn't necessarily negate the immediately bullish scenario, but it brings it into question. Okay, NQ has now retraced quite deeply. It's, by the way, it's 10:06, and it is 10:06, which is early. Breadth is cratering. It's heading straight down. Now, it needs to turn around. It needs to stabilize, and it certainly needs to expand. So, you know, the cash gap in the ES is so far holding. So that's a net positive. But the NQ is just, you know, it just formed a little balance area up there and then traded straight down. So now we're back into if and or but land. The ES and the NQ are not going to go in exactly opposite directions for long. There are too many similar components in both of them. So the NQ either needs to stabilize here and begin moving higher, or the ES is going to take out today's cash low, and then, you know, you're into that Globex elevator shaft. Okay, there's been absolutely nothing graceful about this move up or down. But the reality is, it's making lower lows and lower highs. You either have to be short or flat. This is the area, this is the immediate lean for short trades. Now, I'm not telling you to go short. I'm just saying if you are trading and you are following the pattern of the market, the migration of value is as defined by these pivots, you have to be flat or short. Now, it's noisy. We're still in the gap. Breadth is, I mean, it's just going straight down at the moment. So I'm not real sure what's going on here, but if you are trading, you're either flat, waiting to see what's going to happen, or you're short. This is a great real-time lesson on the heels of yesterday. This is chaotic. Not everything is tradable, but you can define even chaos to the point of, okay, if I just can't, I'm jumping out of my skin, I have to be in this market, what do I do? Well, you go short, your stop's up there around 4,500. Or you can sit back and wait, and you may not take a trade all day for something more less chaotic to set up. This is the reality of day trading. Okay, it's 10:48 a.m. Eastern time. You're either short or you're flat. Another observation from looking at the daily charts, the Dow traded above its March high. It is the only one, let me make sure, yes, it is the only one of the four indices that has done that. That's a very significant divergence. If the Dow takes out, if the Dow turns around now and takes out today's session low, that's very bearish. Okay, it's 11:06 a.m. Eastern time. You got to be favoring shorts. You cannot be playing pick the low. We are still above last night's cash close. That looks like where this market may be headed at a minimum. Breadth continues to dribble lower. It's positive, but sloping lower. This is not a recipe for a bullish outcome. Also I'm watching the Dow very closely because, as I pointed out earlier, it was the only one of the four primary U.S. trading indices to trade above, to make a new high and trade above the rally high of March 29th. And if we take out today's session low on the Dow, then that's negative, probably beyond just an intraday time frame. Now it's holding up okay at the moment, but you may want to keep an eye on that one as the tail, because it's outperformed, and if it starts heading lower with everything else, that's not a good sign at all. It's sort of been the flight to safety in this recent move, with all the FANG stocks getting shot one by one. Okay, we are approaching the cash close from yesterday. This is an inflection point. Breadth is negative and pointing straight down. It's not real negative, but it's negative. If you are short, this is an area to be considering taking partial profits, or at least lowering your stop very tightly on part of your position. That I'm not suggesting we don't blow through this. I'm just saying this is a logical area that is susceptible to creating noise. So if you want to, hold your entire position, that's fine. You may have to endure chop and churn and retracement, but breadth is pointing straight down. All the other indices are in sync. We had that divergence in the Dow, and it continues to dribble lower. So this could end up being quite the nasty day. I was hopeful initially for that wide range day to the upside. Well, we may get the wide range day, but so far it looks like it's going to be down. Okay, a lot of lessons from today. Number one, right now, immediately, is don't play pick the bottom. This thing, yeah, is this thing overdue, quote unquote, to rally some? Yeah, it is. But breadth is negative on the day. The Dow was having a very significant reversal after taking out a very important upper level. The trend is definitively lower. The market is not going to go down all day long at this rate of change. So there's going to be a rally at some point. There's going to be a bounce. If you're short, you know, this has been a great trade. Take some partial profit. If you haven't already, just pull the trigger and take some partial profit. And then sit back and grit your teeth. I mean, this is a day that, this is one of those days where it has more potential for follow through than normal. Now, this based on information at hand, it's 12:07 p.m., but you have an extremely wide range negative day in the NQ. You have the Dow reversing after taking out a very important level. The ES and the Russell are also on their lows for the day. This is very, very negative. Now, unless some miraculous exogenous event comes in, I don't know what it takes to turn this around. I mean, it looks to me like a lot of people got caught with their pants down here, and now they're scrambling to cover, get short, hedge, whatever. But you know, this is not a market to be fading. You know, the other day we had a market, I think it was 2 days ago, and we were sort of joking around, or I was joking around, and said, you know, the world is now has lost a significant number of day traders because day traders are taught and it's promoted to fade everything. So you have that same, you know, a different bunch that went broke 2 days ago is going broke today because they're fading this and they're adding to that loss, thinking, okay, well, if it rallies back 15 handles, I'll be break even. And then it drops 6 more handles and on and on and on, and they blow up. That's the typical cycle of a day trader. So it's like I said yesterday, you have to be different to make money day trading. It's pretty simple. I'm not saying it's easy, but if you follow the guidelines and the rules outlined yesterday, you will at a minimum keep yourself out of trouble. And you will keep yourself out of trouble long enough so that you will begin to believe in what you're doing, and you'll take the trades that work. Now, I was long today and I got stopped out, and then, you know, the market dictated that if I had to take a trade or if I were going to trade, I had to get short. So I got short. You know, eventually you learn to take your opinion and your emotions out of it. You learn to take narrative out of it, and you just trade the damn market. Okay, it's 12:47 p.m. Eastern time. This has been vertical. We're extremely unlikely to continue down at this rate of change. This is a beautiful, beautiful, beautiful pattern of lower lows and lower highs. A lot of noise at the opening. We talked about that. And for those of you that may not have heard me earlier, I tried long. I actually bought right here, the ES, and then I got stopped out. And then I got short. I'm short the ES of the NQ. This was yesterday's session low, had a little bit of a pushback against it. This will be a level to keep an eye on back to the upside now as well. You know, we could very easily go to a chop and churn phase. I am going to try and stay short. I think this is a position that, you know, I'm based on what we're seeing at this point in time, and I'm constantly reassessing my position, but based on what I'm seeing at this point in time, this is one of these times where I may carry some of my day trade over into the next time frame. The Dow is putting in potentially a very, very significant selling tail after taking out the March high and being the only one of the indices to do that. Breadth is negative. It's negative 974. That's not extreme, but it can get extreme, and we have a lot of trading left to go. But again, I wouldn't be too surprised to see this afternoon evolve into a chop fest at some point. It's quite possible the NQ is going to trade, and we'll talk about this at the end of the day in the review. You know, if the negative tenor of the day continues or worsens, then you're probably going to see the NQ at lower lows below the, let me see what that is, below the low of the 18th, just a few days ago. And then there's really nothing between that level and the March low in the NQ. Now, how all this shakes out with the Dow being so far above its March low remains to be seen. And, you know, I mentioned before, there looks to me like there's a changing of the guard here. And the next time we decide that we might be at a downside extreme, it might be time to take a hard look at the Dow as the long. So we'll see. A lot of stuff going on today. This is what makes it fun. You know, yesterday was somewhat of a chop fest, and then you have today. You know, we don't have days like this every day. Certainly we've had them every week, and in both directions. And that's another reason it's so important not to trade a narrative and to just trade the market. Because in this whippy choppy market, you know, if you're willing to let the market tell you the direction it is moving instead of thinking, and listen, this is note to self. I'm guilty of this. You guys have seen me do this. I don't lose money that way, or not much, but sometimes I won't fully take advantage of the opportunity when it's obvious that my analysis is wrong and has changed. But right now, you got to be short or flat. I wouldn't be pressing the short side of this if you're not already short, because it's just so damn vertical. But you certainly can't be trying to scalp this from the long side with most of the retail chat room ES day trade universe. Okay, it's 116, and the decision you have to make now, if you're in this, first of all, it's too late to sell it, and you can't buy this. Now, the decision you have to make as a trader is this has been, you know, you had an outsized move, you have an outsized gain. You can take it. That is a perfectly acceptable, legitimate trade decision. Or if you don't do that, I mean, take your profit or start trailing a really tight stop on your position. If you don't do that, I think you almost have to be at this point willing to carry it over into the next session, because it's likely at some point you're going to get a retracement bigger than what we've seen so far. So let's just see what we have seen so far. So this was about 12 handles. This was about 11 handles. This was about 9 handles. So let's just say 12 handles from here would be, I mean, you know, we've had tiny retracements. And maybe this is going to go on all day. I don't know. You know, I don't have, I can't predict, and I know that. Now, Brett is heading straight down. It's negative 1400. So, you know, this could be one of those 3% down days that just gets crushed all day. But it also, the lower it goes without any sort of retracement, the more susceptible it is to that sudden 15 handle bungee jump. Just be aware of that. But if you're not in a trade here, your day is done. It's trying to trade this unless something sets up, and I shouldn't say that. It's 1:20, so something could set up between now and 3 o'clock. It might be viable. But at this moment, if you're not in this market, there is no trade to be had. And almost on cue, we get the rip to the upside. This is an area that is a candidate to hold a bounce. Okay, it's 131. So what you want to see now, or what we're looking for, is to see if this rally stops and where it stops. This is a candidate for that. And then that will give us a potential upside extreme. This is clearly the downside extreme, and I'm going to include an area below this low. So it's quite possible that wherever this rally ends, this is one scenario, wherever this rally ends, we go into a chop fest and we trade between the peak, the upper extreme, and the lower extreme down here. Another scenario is we just go ripping higher again. I don't think that's going to be the case. But if we start making relentless higher highs and higher lows, you have to respect that. Okay, this is the poster child of why you don't fade strong trends. You don't fade spikes. I'm going to talk more about that in the in part 2 of the webinar. By the way, breadth has gone to a lower low. It's now negative 1600. Today could be that negative 2000 day. It's 2:04 p.m. by the way. We came out. We had the inevitable bungee jump, and clearly it fell spectacularly. But again, to reiterate what I've been saying, you can do nothing, but you don't try to buy this market. You just do not do it. The lower it goes, if you're trailing a stop in your positions, that's wonderful. But if you're out of this market, the reward to risk is not great in here. Once again, we've gone to a lower low with a lot of conviction. Now, maybe in the next 30, 45 minutes, we have another rally and we set up another level. The immediate level now, back to the upside, would be here, incidentally. But this is one of these waterfall type of decline days. I have no idea what the attribution of this is. I really don't care. The Dow has firmly joined the party, convincingly joined the party, and everything is in sync. Everybody is selling everything at the moment. So there is institutional conviction behind this move, and you don't fade it. You just do not do that. Okay, it's 237, and we blew through this area. The next area is going to be now the area between these two pivot highs right here. And I realize that's a rather broad area, but it's just the way it is. Breadth has curled up. It reached negative 1600. Now, it's not going to be a big shock. Let me put it this in. My thinking is the easy money has been made today. We've gone a long way really quickly with unusually small retracements in rotation. in any given time frame, within any trend, no matter how strong, the market will spend most of its time going net nowhere. And that's true today, believe it or not. But really, we really haven't established this balance area type of trade that you typically get even in strong trend days. You know, again, I think the easy money has been made today. I wouldn't force anything in here. If something sets up that becomes obvious to you, by all means, take it. But I wouldn't be too surprised if the market isn't rather whippy with air pockets up and down between now and the close. If we were to get a strong rally somewhere back up into that 44.40, 44.40, 45 area, and we're getting close to the last 15 or 20 minutes of trade, it'll be interesting to see what they do with it, whether they jerk it straight back down to lower lows or they bungee jump it. So, for me, the easy money has been made today. I'm flat. I'm not going to say I won't take another trade. I have positions in other accounts that are short that I'm going to carry over. But I'm flat my day trade account. That's a decision I made. Just do vertical. If we do get a strong rally into the close, then I think that might be an opportunity to position shorts to see what happens at tomorrow's opening. The NQ is actually near the low of, what was that, the 18th that I said? I think it's the 18th. Yes, near that spike low. But the conundrum here, the really odd thing is that there is a huge gap between the spread between the Dow and the NQ is really large. Now, that's probably a function of all the FANG stocks just getting monkey hammered of late, and it could be marking a change in allocation, a change in, the macro people deciding that value is in the Dow, those stocks, as opposed to the growth stocks. That's out of my depth. I just trade the market. We'll see what happens in the close. Looks like we're going to trade down to a lower low here. So we'll see what happens. Okay, it is 3:53, 3:54. And we've only had brief respites from extreme selling all day long. The NQ is very close to its April 18th low. You need to watch that. That's an inflection point. And if we take that out, we're in that buying tail now, by the way, which makes it extremely likely it's going to come out. And we actually could accelerate lower below that. Breadth is on its lows, heading straight down. It's negative 1800. Today could very, very, very easily be a negative 2000 breadth day. Reiterate what I've said. Don't try to buy this. You can short it, you can be flat, but don't try to buy it. And the deeper it goes, quite frankly, the reward to risk is not great because it's just getting so stretched. But again, breadth is heading straight down. So don't try to buy this. If you're still short, good for you. Trail a stop, close your eyes. I'd probably turn my computer off and come back tomorrow about noon. Okay, breadth is negative 2000 and change. It's 3:07, so we have 53 minutes left in the cash market. This is going to be an epically down day. it's going to be really interesting to see where breadth closes. So I'm going to send out a special report tonight, but I'll be here through the cash close and we'll talk about things at that point in time, okay? Okay, it is 4 p.m. on Thursday, Eastern time in the US, and let's do our review that we do every day. Today was quite the day. Hopefully, what I want you guys to do in the room, I want you to go back and listen to the webinar. I will send the copy of the webinar that we did yesterday. Listen to that webinar. Today was uncanny in the number of elements that were covered in that webinar that came into play today. There's so many of them. I don't know. I don't want to. This is going to be a review of the day and what we're looking, where we want to be looking tomorrow. But today was just an uncanny day in terms of all the elements that we covered, from determining trend, how to get in a trend, managing trades, determining targets, using the daily charts, and how important it is to be cognizant of what's going on in all 4 of the indices, and then letting the market intraday determine your levels. We had really good levels established all day long by the market itself. And you can go back and you can listen to this recording of the live trade room recording today. And I think you'll, and if you listen to the webinar yesterday, I think it'll be it will reinforce a lot of what we talked about yesterday in the day trade webinar, part 2 of which will be next Wednesday. I will send the registration out for that. Okay. So let's clear all this stuff off because we have a fair amount of things to discuss. And let's go to the daily charts. I'll tell you what, let's do. Let's go to this page because I have more stuff I want to show. Okay, let's find, let's go to let's start with this. All right. Here are the 4 futures contracts. You can see we're going to close near the lows. The cash market will close near its lows. We'll take a look at the cash markets in just a second. But this was the tell today was really, in my mind, when the Dow could not generate any momentum above this level. And it was the only one of the indices that took out its March high, and it by a long shot. That is an extraordinarily wide divergence between the other indices. Now, a couple of other things of immediate note here. The NQ is closing below the April 18th low. It is in the abyss. It is in an elevator shaft. There is nothing objective from an auction market perspective between here and the low back in March. This is an elevator shaft. All you have below here are the usual plethora of magic numbers. So I don't use that. We've gone into great detail why. So there's really, that doesn't mean we're going to trade straight there. It doesn't mean we'll trade there at all, but it just means that there's nothing obvious in the NQ below where we're going to close tonight. Now, on the other hand, there are some objective levels that if, for instance, the NQ holds this general area that it reached today, then it's very likely that the NQ is going to bottom coinciding with the ES bottoming. So from here to here is that level in the ES. In the Russell, it's extremely well defined as well. And it's right here. And below the April 12th low in the Russell, there is nothing until you get down into these buying tail, these spikes in March. And, you know, closing below this low would dramatically increase the probabilities that that's where we're going to go. Now, the huge conundrum at the moment is the YM. The YM is a fairly comfortable level from this downside key reference area that includes several lows and the low of the 12th. Let's just take a look just for fun. If we were to reach this level tomorrow from where we are at speaking, it'd be about a 2% decline. That's pretty healthy. Today's decline was about a little over, it's about 2.25%. So, yeah, it could happen. The question I have that I'm having a hard time figuring out what it would look like is if for instance the NQ trades down here, what is it going to do? Because surely, I mean, down here, let's see what percentage that is. See, that's about 5%. Now, today was a pretty substantial move. Today was about 4%, but you know, tomorrow a 5% move would be epic, really, really epic. And a 5% move would likely bring the YM into this area. Yet I realize that these two are not that highly correlated because you have the FANG stocks, et cetera, et cetera. Then you also have the Russell, and it's in an important key reference area now. So safe to say, forget the if and or buts in this thing. The markets are closing tonight at inflection points. This is, you know, really interesting. This was an extraordinarily wide range down day, accompanied by significant divergences, important divergences. And I'm not sure if Brett closed negative 2000. Let's take a look. It did. It closed negative 2008. Now, it's a little unusual, except in waterfall type declines like we had in March 2020, for Brett to have consecutive negative 2000 Brett days. If that were to happen, then you're looking at the S&P certainly well below the March 18th low, and another wide range day, something in the neighborhood of the same percentages today. This is the cash chart, by the way. Okay. Let me get rid of this because it doesn't pertain to what we're talking about. There we go. So, you know, in bull trends, negative 2000 breadth readings usually are momentum lows followed by relatively small further price damage on less breadth, and then you get a significant rally. Well, we're certainly at a key reference area here. You know, the 10 days move rolling over, the 5 days rolling over, but these are slower to react and are only really relevant when they reach an upper or lower extreme, which neither are at the moment. So another wide range day, a very choppy market. Nothing has been definitively determined in my mind, bullish or bearish. You know, we've been trading between the March high and the March low now, all of this month and a little bit of last month. And you can see we're churning. Today was really wide range, but we're going net nowhere in most of the indices. So the important level back to the upside as we move into Globex trade will be first about halfway up today's session range, and then the high of the session range. To the downside, I think you want to forget the NQ, because the NQ will follow or the S&P and the NQ are linked. And the S&P, the ES does have a low that has not been taken out yet. That is a key reference area. So I'd be watching this April 18th low in the S&P tomorrow. In the Dow, there's really nothing between where we closed and the lows of mid-April, several days ago, last week. And then the Russell, you can see it's in the middle of the range from the low in February, the high end of March, and we're chopping around in there. Today's a wide range day, but the Russell also closed in an area of importance as determined by the market itself. So there's nothing here to me that is bell ringing. Okay, this thing is extreme to the downside. We want to be biased to the upside, looking for trades, or this thing is extreme to the upside. We want to be looking for short trades. I'm going to come into tomorrow's trade neutral. We are at inflection points in some of the indices, and I'm going to be watching the Russell very carefully. I'm going to be watching the S&P/ES very carefully. So guys, I hope you had a good day. Hope you found this helpful, and we will see you in the morning.